Hey everyone, welcome back to Corporate Decoder. Today we're diving into APA Corporation's latest proxy statement. And trust me, there's more in here than just names and numbers. Think of it as a treasure map. If the treasure was slightly less exciting than gold doubloons, more like insights into how the company plans to make money and how much they're paying their top folks to do it. This report tells you everything you want to know about who's running the show, how they're being paid, and what major decisions are coming up for a vote. Buckle up because we're about to decode some corporate jargon. First off, APA Corporation. These guys are in the oil and gas game. They explore and produce in the US, Egypt, the UK, and they're poking around offshore Suriname and other places. They're serious about shareholder value, safety, and of course, sustainability. We will see just how sustainable those operations actually are. One of the key items is Proposal 12, which is about ratifying the appointment of Ernst & Young, or I, as their independent auditor. Basically, the shareholders get to say whether they agree with the company's choice of accountants. It's like voting for the referee in a sports game. Now let's talk money. I didn't do this for free, and the price of those services is something to pay attention to. In 2024, he raked in about $7.5 million. From Audiate in about $7.5 million, a tiny fraction of that sum. At most of that amount, around $7 million, was for audit fees, that is services to confirm that the account is accurate. The bill also included $200,000 for tax services. Quotes interesting is that the audit fees jumped up a good bit from about $522 million in 2023. They cite the acquisition of Callum Petroleum Company and structuring of debt as reasons for the increase. All this means is that it got more complicated to audit after a major deal and some financial juggling. The audit committee needs to pre-approve, all those fees and services that A provides, making sure there are no conflicts of interest. Basically, this policy is a procedure to make sure the auditor is not also on the take. Another big item on the agenda is Proposal 13, the advisory vote on executive pay, named executive officers or NEOs. It's a non-binding vote where shareholders get to say whether they think the top dogs are being paid fairly. It's like a report card for the bosses, but without any real consequences. If you really want to know how the company's executives are being paid, check out the CD&A Ask the Shareholders Have Questions. So let's see what APA responded. KIV targets are set independent of prior results to reflect market volatility. They consider geographic footprint, scale, and complexity, not just market capitalization. When choosing compensation peer groups, on their CEO's pay is aligned with company performance relative to peers. The company also stated they are refining the 2025 long-term equity mix by adding stock options. It's about better aligning executive decisions with shareholder return, which is a pretty standard for Aussie Prepare. I want to check out what metrics actually affect that executive pay for. Cash return on invested capital makes up 40% of the performance awards. It helps make sure they're actually making good returns on what they spend. So executives can be paid between 0% and 20% of the award, conditional on how the company does. What that means is that depending on which happens, that reward can be increased or completely wiped out, all based on a company's performance. Also, another 40% is based on TSR, total shareholder return. Compared to other oil and gas companies, the better APA does, the better the payout, all based on a formula. The last 20% relies on sustainability metrics, with focus on reducing methane intensity. I am curious just how much of that is greenwashing, though. We'll see. And Mesid Capital makes on sustainability metrics with focus on reducing methane intensity. I am curious just how much of that is greenwashing, though. We'll see. To give them even more incentives, executives have to own a certain amount of company stock. That way they are incentivized to maintain high price of stock. If they are not doing a good job for a longer period of time, their pay will be affected as well. And now the part that likely everyone cares about, the pay versus performance table. It is important to note, however, that this disclosure was prepared in accordance with the requirements of the PVP rule and does not necessarily reflect the value actually realized by our executives, how our executives' compensation relates to company performance, or how the MD&C committee evaluates compensation decisions in light of company or individual performance. The SEC really like to cover themselves for our CEO, MVIN, 1834 respectively. Satmin 2024, his summary compensation table total was that 11ANC committee evaluates compensation decisions in light of company or individual performance. The SEC really like to cover themselves for our CEO. And in 2024, his summary compensation table total was at 11 CNC committee evaluates compensation decisions in light of company or individual performance. The SEC really like to cover themselves at for our CEO, and that in 2020, it's basically the money a company has left over after paying its bills and that free cash flow. It's basically, summing it up, I really like what I see with the company tying in performance with metrics. That's something a lot of companies simply don't do. While some are definitely debatable as to their value, especially that sustainability department, APA overall seems like it is managed well. Now let's zoom out and take a broader look. APA is in a tough industry. Oil and gas prices can swing wildly, and that affects everything. The company needs to manage costs, be smart about investments, and adapt to changing market conditions. So they seem to be doing just fine in that environment. One thing to watch for is how they keep managing risks, including the effect of any climate change regulations. It's great that they're trying to cut down on methane emissions, but these efforts will really pay off in the long run. And the company is not without fault, but as a whole, these reports inspire some confidence about where APA is heading. That's it for today's Corporate Decoder. If you found this breakdown helpful, please leave a like, share your thoughts in the comments, and subscribe for more deep dives into the world of corporate filings. Thanks for tuning in.